Thank you for tuning in to Market Update with Russell Calkins for this August 2nd, 2018. Currently, it's 3:15 p.m. Arizona time. So as you can see, I'm doing these reports between 3 and 4 o'clock. So if you want to stay tuned for a live report, you can. If not, you can just watch the video on different platforms, YouTube, uh, LinkedIn, Facebook, um, Google Plus, on and on. Um, but a couple of fantastic reports again. I recommended to buy the gold at 212. We got in at 214. Remember, I stated that $1.50, $2 on a $1,200 product is close enough for gold. All right. And again, I don't recommend market if touched orders, even though you can place those. These are very simple strategies that I'm giving you. They're the same strategies I used as a commodity trading advisor and a cash physical broker for over 40 years. My track record is superb. All right. As a commodity trading advisor, I think I only lost one trade out of all of them. I'm one of the best people to follow based on the past. And again, nobody knows what's going to happen tomorrow. The best people can be the worst people tomorrow. Okay. So the know-it-alls, there's a story that we learned in the commodities when we first started learning about commodities about the hog man. Okay. The hog man knew most all the Iowa farmers. And so he would place his trades right before the report came out, and he would do the max trade. In those days, it was 1,000 cars or 1,000 contracts. And sure enough, right after the report came out, always went his way till the last trade. The last trade, the report came out. It was so bullish, they thought pork bellies would lock up the limit. He bought pork bellies, even though he's a live hog guy, because pork bellies is the belly of a pig, which is bacon. And boy, it locked, instead of going up the limit for 10 days, which they expected, it went up about 20 points and immediately locked down the limit. And it stayed down the limit for 5 days in a row. So he went negative equity big time, because he was straight up futures markets. And sometimes your stops don't work in the futures markets. Remember, that means stop what you're doing, computer or broker, and fill my order. Well, the market could be crashing like the third week of January of 1980. Silver closed the Friday prior to that at $38.80. It opened at $10.80. So the cash market was already crashing, because what happened is a wealthy prince dumped 400 tons of gold on the open market. And that's what caused the gold and silver crash the third week of January of 1980. In fact, I have a special report on YouTube, what caused the silver crash in 1980, and the bunker hunt story, what caused the silver crash in 1980. Fascinating story. Also have a story out on YouTube, a special report on what caused the housing crisis in 2008, 2009 that you've never heard before, but it's all facts, and you'll find it quite fascinating. Most people that try to tell you about what happened to the housing, what caused the housing crash in 08, 09, they only guess. I know what happened, and you'll hear it on my report. All right, well, let's get right into it. The good news is we got filled at gold at 12.14. And again, if you want to check out these recommendations, every single recommendation I've given since the market update with Russell Calkins, every one of them has made money. I can't tell you when to get out, all right? But they all made money, and some of them significantly, like Bitcoin. We bought Bitcoin, I think, 3-4 days in a row. We sold it, and look at the Bitcoin market right now. It's like 7,500, closed today at Bitcoin at 75.77. We were up there. I think we started at 71, then we went to 78, then I think we got one at over 8,000. So that's pretty good money there. Also, the sugar market. We bought sugar at 10.77 cents per pound, And we also bought again at 10.55 cents per pound. And again, my YouTube videos will verify this. Just back up a few days and look at sugar. Write down these recommendations that I've been giving people. See if I'm making money for people. If I'm making money for people and you're a novice, try paper trading these recommendations. Your eyes will open up, all right? Because I'm a pro at this. And again, nobody is a professional or an expert on where prices will be tomorrow. Always remember that. And that's why the hog man that was a so-called expert in the hogs turned out to be the worst guy to follow at the end. So keep all that in mind. Nobody is an expert on where prices will be tomorrow. That's for sure. All right, and so we got into sugar. Our average price is around 10.6. It closed at 10.62. So you are at the money or in the money right now on sugar. And it's up to you when to get out. It's up to you to put your stop losses in. I'm not going to tell you where to put the stop loss, which a stop loss is, you know, a protection measure in the futures markets. On the options market, there's no such thing as a stop loss. They'll automatically fill you. If you put a premium lower than where the market's at, they'll just fill you automatically. Not to get too technical, because that's not what this program's all about. It's what I do. If I were still a commodity trading advisor, what positions would I buy and sell? That's what's important. And with these simple strategies, being a position trader, also a contrary trader, which means I do the opposite of what the majorities do, okay? And everybody seems to be buying. I'm looking for a reason to get on the sideline or go short, and vice versa. Today we'll be covering very exciting. So we're out of all our positions, if in fact you got out, because they're all in the money. It's as far as you want it to go, which I would still recommend staying in sugar and gold. Just so you know, I would still be holding my positions on those two contracts, and I'll keep you posted on that if in fact you're still going to hold those two positions. They're still wonderful positions. We're filled in those positions and we're making money. All right, that's a fact. So we're covering the United States dollar index. This is very exciting. Closed at 95.00. We're using candlestick charting. We're using the Bollinger Band for our steady indicators. And this is the US dollar index, okay? Closed up 0.54 today, or 0.57 of 1%, and it closed at 95.00 even. Our Larry Williams percent R, one of my very favorite study indicators, like stochastics, relative strength index, I like the Williams percent R the very best. That guy is a mathematical genius. You know, anything over 20 is significantly oversold. Anything over 80 is, anything over 20 is significantly overbought. It's actually backwards on the percent R. All right, anything below 80 is significantly oversold. So that's why the Larry Williams, or the Williams percent R, Dr. Larry Williams is his name. So we got 28.02 on the Williams percent R. So it'll probably be above, or, you know, at 20 or lower if we hit our price, which we want to get in the dollar index. We want to sell it at 95.05, and currently we're at 95.00. So you want to sell the dollar index at 95.05. And let me look at the low or the high on the day on this dollar index, just to take a look at this. All right, scroll up a little bit. So today's high on the dollar index was 95.02. All right. And 95.05 is our buy-in price. I would recommend you wait to 95.05 on this one. This is not like gold, okay? This is an indice. It's not a physical product. It's paid off in cash, like the bond market or the notes. So keep that in mind. So you want to be a seller on the United States dollar index on the daily chart. I use investing.com. And once you go to investing.com, just look at the dollar index, click on the link. Once you open that up, click on candlestick charting instead of just your regular bar chart, not to confuse you about that. Also, you've got this thing right beside your settings icon. It's called indicators / and then there's a scroll down on that. So you want to hit that to pull up Bollinger Bands or BB, and it's called %R. It's got a percent signal and then R for your Larry Williams %R. That's what I'm currently using. And you want to be a buyer on the dollar index at 93.72. And of course, past performance never, ever indicates future profits. Thank you for tuning into the Market Update with Russell Calkins. Be sure to tune in tomorrow for a brand new market, or if the dollar index stays at these high levels. And I'll also update you on the gold and the sugar, which I'm currently staying in. And may God bless you.